Hi everyone, I hope you can hear me loud and clear, everyone. I can see now Venki, Veronica. Yeah, so lots of you already here. Thank you. Patrick, we have John, Darius, VJ, Hazel, Isa, great, and Alan, CK, Jain, right? Lots of folk are joining in now. We have lots of people. I'm lost in count here. Welcome to the live trade hunt webinar for options trading. My name is Bang. For those who don't know, who have not attended my previous webinar, so I've been in Puna Profits for I think 9 years now. I've been trading and coaching and training options, and yeah. So like last Sunday, when I shared with you one strategy called C2D, and I said on that day that because the day was closed for the weekend, and now the day is now open for trading today. So today is good because tomorrow will be I think tomorrow is a Thanksgiving day and the US market will be closed, and Friday will be only half day trading. So it's good. We are just at the right time here because we have a full day trading. Now, I don't expect to spend the whole day trading today. I would target to have my session to be roughly about 2.5 hours, and hopefully we can sign off here about midnight Singapore times. Otherwise, it will be a bit too late for folks in Asia. Okay, let me share my screen. I think you can see my screen, right, everyone? Yes, thank you, John. Yeah, okay, good. All right, so I don't want to waste your time because I have so many things to cover today. And you know me, the moment I open my mouth to talk about options, it's very hard for me to stop. Okay, that's my habit. I don't know. I do my best to keep it on time, but let's say just start it. Otherwise, it will be late. Now, 1 hour from now, the market will open and then we'll have a lot of fun. I have a lot of fun with real data, with real trading, and you see me doing a lot of trades, including new trades that I'm planning to enter today. But also, I want to demonstrate some of the rolling actions, the way I upgrade the C trade to D trade when the market opens. Okay, so the first 1 hour will be more or less on my theory part and my routine. I would tell you what I'm doing in the day time and in the night time, right? So again, disclaimer here, make sure that you understand what I'm going to show you today is just for educational purpose, and even the trades that I'm going to enter today are based on my knowledge and the one that I've been using for many years and works very well for me. It doesn't guarantee that it will work for you. So just to make sure that you are aware of risks and then take your own risk, and because you will be trading your own money. So you need to be careful. If you're not comfortable with that, then just use paper account to trade. Okay. Now, agenda today, because the market hasn't opened yet, I want to explain a little bit on what is the daily activities I'm doing, like the routine before market open. What do I do, right? And then after the market open, do I trade immediately or I wait, right? And then what kinds of sensings I'm doing, and then so until that, I will recap the C2D strategy, the one I introduced on last Sunday, right? And then when the market opens, I will show you some of the trades that I have screened, I have prepared for, but because it has been done before the market opened, so now I need to simulate again to see if if it's still valid, or I need to find another candidate, right? I will show you my thought process, analyzing the trade, the risk and reward profile, and finally get into the execution of the trade. And within that, I also say I want to demo to you I call it demo, but it's a real thing, huh? The real trade that I'm going to do when I want to roll some trades or I want to upgrade some trade, and I want to use some of the trades that I entered 2 days ago. Remember, for those who have signed up, you have perhaps you have joined the e-gathering on last Monday, where I entered 10 trades, right? And then I may want to upgrade some of the C trades there into D trades, right? So that is something I want to demo to you as well. As for those who are in my OTP community, I do have a couple of trades where I'm thinking to upgrade as well. Okay, so when the market opens, I will show it to you live. Yeah, and very importantly, I want to answer questions that you are sending in, and please use the Q&A tab in the Zoom chat, not the chat tab, right? Don't use the chat tab, but use the Q&A tab, because that is where, you know, the questions are asked, and then I know the coaches are there to help, but they will forward me a list of questions as well. So at the end of the day, I will look into the document that they send me and I will answer one by one, like I did last Sunday. All right. So here's my daily trading routine. So let's just let you know, now I have free time. So I have a lot of time in the daytime. So I will just tell you what I'm doing on the day-to-day basis. So before market opening, normally I just go through the list of the stocks in my watch list, right? So I have a very long list of watch list stocks. I have like 600, 700 of them, but normally I don't go through all of them. The one that I trade often, I put in the top, right? So then I just go through the top, like 30 stocks or so, zip through their charts to see which one would look attractive for a certain setup, for a certain strategies. So I go through one by one, right? So for example, I have a watch list here in my Thinkorswim. You can hear Bang top list, right? So I will go through the list of the stocks here, focusing on the top one because that's the most commonly traded one. And then I will go through the chart and look into the chart of those stocks to see any of those could give me an attractive um, like chart or not, right? So then there's some attractive chart like this. I could potentially prepare a trade for it by simulating ahead of time. Yeah, so I place the order out there with the placeholder price, the price at which it won't be filled when the market opens. And then when the market opens, I will re-examine again the whole trade to see if the trade still valid or not, right? So I do have a few trades I have prepared for today as well, which I will show you later on. So that is part of what I do before the market opens. And again, I would simulate few trades using different strategies. So, you know, I have some 26 strategies in the curriculum, but I normally use about 10 or less than 10 of them, right? 10 strategies. Those are the ones that I use the most: calendar, diagonal spread, DS hammer, boom put spread, crouching boom bang collar, and condor. So those are the key ones that I use the most, right? The rest I would use occasionally, like if we want to play earnings, then I could use uh, earnings probability spread or ESS, or I can use EPS, earning. So that's earning sniper spread and earning probability spread, which is EPS. So there are strategies that are used for a certain event play, like earnings or product launch event. So that those are the strategies I use occasionally. I don't use very often, but the bread and butters one that I'm using is still CD, you know, boom bang colors, couching boon, and condo boom put spread, and occasionally classic put as well. Yeah. Now, before the market opens, I also read some of the key headlines. Now, I don't read lots of, you know, articles and stuff because there are so many of them. And nowadays, if I can, I just ask ChatGPT or Gemini to give me a quick snapshot of what's going on. Otherwise, I subscribe to some of the the key website where they push to me key headlines before the market opening, right? So for example, I subscribe to businessinsider.com, right? Or thestreet.com. Then just before the market opens, about 1 hour before, then they will send me an email to my inbox, in which they say, okay, here's the top 10 things you need to know before the market opening, right? So I read through it, and any of those 10 have something to do with my open trades, then I will click into it and I read the details. If it's not, then it's not relevant, and then I just ignore it. So that's the way you can quickly glance through, tons of information every day, right? And only focus on the one that could potentially affect your trade, right? So I also once in a while I look at the economic data, and the one that I like to look at is what is that? Here's the one. Investing.com and economic calendar. So that is the one, economic calendar here. So normally those are the one I also pay attention to. For example, now it's 9:43 in Singapore time, and just few minutes ago they released some of the report, and I only focus on the one with 3 stars, right? Like initial job claim. This one they have just released about 13 minutes ago, right? So what happened there? The actual job claim comes in like 216,000, which is slightly below the forecast, pretty much in line. So should not be a big deal. So only focus on the 3 stars because that's the one that could potentially move the market. Right. So the next one will be a PMI, which will be released in the next, I think, 2 minutes, right? So no, 1 hour. So, and then that at that point in time, the market would have opened already. Then just keep in mind, when the market opens 15 minutes later, there will be a CMI report that could potentially have some impact to the market. So those are the things in terms of news or economic news. Those are the tools that I use, right? Once in a while, I look at the Fed Watch tool in the CME to see the probability of Fed cutting rates in the next FOMC meeting, for example, because those are the ones that could affect the rate sensitive stuff, like on the meme stocks, on crypto related stock, or the home builder stocks, right? So those are the ones that have higher sensitivity to the interest rate cuts, right? So those are the one I normally use. Other than that, I don't read tons of articles and news. All right. So that is before the opening. Now, right after the market opening, what do I do? My habit is I don't trade the first 30 minutes, right? The 30 minutes I normally just sit back, have a cup of tea and watch the market to have a good sense of how the market is going, right? So what do I watch during the first 30 minutes? Well, observe the market movements across the markets, for example, equity markets, and then oil, gold, crypto, interest rate, things like that, right? So look into those different key markets to see how they are moving, right? In what direction? Are they changing a lot? Are they choppy? And then more importantly, have a sense of where the market is going. Now, how do I read the sense? Very difficult. But if you watch the market long enough, for many years, you can develop a sense of the market. You look at the way the market behave, and then you could kind of guess where the market will be going on that particular day. Especially I look at the rotation as well, rotation where the money is flowing out or to, right? So you can go to the Finvits where they have the sectors, and you see what sectors have a lot of greens, what sectors have a lot of reds, for example. That can give you a sense of where the money are flowing to. And I don't go there, but maybe the better way to sense the market rotation. For me, because I'm using Thinkorswim, which is a chart swap, I can kind of sense where the market or where the momentum's going based on the code trends here. If you have this platform, just add the code trend in the customize here and add this code trend. I find it very helpful. If you see a lot of green, that means the market has very positive momentum on the day, or a certain sector like yesterday you see Nvidia, right? Lots of money flowing out of Nvidia yesterday after the news that it is, I mean, Meta is considering to buy TPU chips from Alphabet instead of GPU from Nvidia, and that caused a big panic yesterday. And yesterday you see a lot of rest going through semiconductors, and because of the sell off in Nvidia and AMD, right? But today it looks like it is stabilizing, and it seems to be okay, because I think the market has misread the news on Meta buying TPU from Google. I don't think it's going to happen anytime soon. I think the article say they are considering to buy TPU chip from Alphabet, not earlier than starting 2027, right? And this is not like replacing Nvidia chip. I think it's more on the diversification of suppliers than anything else. So now market has enough time to digest the news, and I think money should flow back to Nvidia today. And Nvidia, this setup, I think it could be a very good candidate for C2D trade as well, which we'll take a look at it when the market opens. Okay. So go back to this. So I spent the first 30 minutes watching the market, sensing it, look into the sector rotation, where the market is going, and then kind of have a good sense of whether I should place a trade on that day or not, right? And then particularly I use the Excel tool, which you will be able to use when you sign up the Wave Rider, to track the trades in your portfolio, right? Of course, you can use your portfolio in the brokers, right? Thinkorswim or IBKR, but I find it very difficult to use the brokers portfolio to track, because after you roll an option, then the number is no longer accurate. So you have to have your own tracking tool, which I have the Excel file, which is part of the curriculum. You can download and you can fill in your trade there. And I use that Excel file to track. Now, Excel file, you just need to have one-time effort to enter the trade at the entry or when you roll it. But the day-to-day, when you do not take any action, you don't need to update anything. Just open the Excel file. It will synchronize with the data from the platform. And I have both version for Thinkorswim and IBKR. And later on, when the market opens, I will show you the tracker with synchronized with the Thinkorswim, right? I'm using here. So then, like the portfolio and positions by second, right? Every single second, the trade, how is it doing, how much is making, or how much is losing, right? And is there any action you need to take in terms of rolling or not? So they're all there. The information is there in the tracker, and I've been using it for I think more than 10 years now, and I find very helpful. And many folks who are part of the Wave Rider community, they also find the Excel tracker extremely helpful. Yeah. Now I have a Excel tracker for my personal portfolios, and I show you different accounts, right? That's I need the one Excel file to put on the accounts together, so that I can have one snapshot of all my accounts, how they are doing, and then the detailed trade by trade as well. I do have one tracker for the OTP trades, where I think I have like 24 trades open right now. And then I have one Excel tracker for the Wave Rider / Masterclass, which is the e-gathering trades. Right now, I have 15 trades open for the e-gathering or Wave Rider. And in fact, in my master tracker, I have all of them inside my master Excel tracker, so I can see all of them at the same time. So then I watch those trades and I see, hey, do I need to roll it today? Is there anything I need to do? Is this trade approaching the profit target and should I close it now? Or this one is hitting my stop loss, should I close it now? So those are the things that's available in the trackers, right? So I will check and see if there's any actions I need to take. And if there is any actions I need to take, then I will take actions, right? And then I will inform members accordingly. So if it's about the e-gathering trades, then I will take action, either rolling, closing, cutting loss or taking profit. And I will inform you in the Discord channel. Here's are the actions I just took in today, and the detailed screenshot and then the detail of the action as well. Similarly for OTP, if I take any action, I would do the same thing and I send it out to the Discord channel for OTP members, and they got to see my action immediately. Right, so those are the things I do every day. And later on, when the market opens, I will show you live. I show you live what I am doing every day. Yeah, there's nothing there. So you get to know the behind the scene works, right? So then you understand how I'm handling the trades every day, right? So then when the market opens, like for half an hour, I started to trade normally. That's where I started. And I would check back the validity of the trade that I have simulated before the market opening. I will need to see whether those trades are still valid or not. And if it's still valid, then I could enter the trades and I will inform respective members, either OTP or the wave riders, or it's for myself, then I don't need to inform anyone, right? Now, why do I need to wait for 30 minutes? Well, the first 30 minutes, usually liquidity is not so good, right? So when the market just opened, right, the buyers don't want to buy immediately. The seller do not want to sell immediately. So they kind of wait and see, and therefore the bid and ask could get widened because the buyer don't want to buy yet and the seller do not want to sell yet. But after a while, they will move their bid price and ask price closer to each other. And then that's where you see liquidity comes in. So the first 30 minutes, liquidity is not so great. And the option pricing especially could be very wonky, in the first 5-10 minutes before the market, when the market just opened. So normally I don't trade during that time because that liquidity and wonkiness of the option pricing. Also, based on my experience, most of professional, big boy market makers, big guy, normally they trade after the market has opened for at least 30 minutes, right? They don't get into the market the first 30 minutes because liquidity issue. They are big boy. They want to trade in large quantity, right? And if the liquidity is not there, then there's no taker, right? Then the price will not be ideal for them. So then just go along with the big boy, right? When they wait, we wait, right? Because that's so that you see the first 30 minutes. That's the time when rookie traders, newbie came in and panicking selling or panicking buying kind of trade, and often you see the stock price move crazy up and down and then finally settle after a while. Yeah, so this is based on my observation, and normally that's the reason why I don't trade the first 30 minutes. And then the last step here can be done when the markets are closed, which is the day after, right? So normally right now, when the market opens at 10:30, 10:30 in Singapore time, I would sign off after 2 hours. So about 12:30. For OTP, normally I sign off about 11:30, so 1 hour. Same for Wave Rider. But for my personal account, because I have a bigger positions and I have more trades, then normally I stay back and continue for another hour. Then I would sign off about 12:30, so 2 hours max. Sometimes I can stay a little bit longer, but 2 to 3 hour max a day, and then I go to bed after that. So the day after, then when I wake up in the morning, normally now I don't have a full-time job anymore in the morning, so I don't have to wake up early, right? So I just wake up at whatever time I want, like 8 a.m., 9 a.m. if I want, have a good breakfast and coffee, and that's where I started looking into on the trades that I have done the night before, right? So then I will send out formal notification to OTP members. So OTP, you get to receive notification from me twice. One, the flash, like quick and dirty one, notification, like the one I just enter and I send it out immediately during the market timing. But the formal one with the proper write-up, with the right structure, with all the information, will be sent out the day after, right? So that's normally how I work. So then I would tabulate on the trades that I traded before on the night before, and tabulate on the P&L how much the portfolio has gained or lost within the last 24 hours, and then link that one back to my personal financial statement spreadsheet that I have, right? So I do have the personal financial statement for my family updated life. So that's the way, because I'm a finance guy who's been in the finance for almost 30 years. So I kind of like to play with the numbers. Yeah. So those are the things that I do every day, right? Now let's just recap the C2D strategy for those who don't remember all the things that I talked during the Sunday webinar. The C2D is a two-step process. When you enter first with a calendar spread, and the intent of starting the trade with a calendar spread is to collect rents, right? You could keep rolling, collecting more premiums while we waiting for the stock price to go higher, right? If it goes higher, then you upgrade your trade. But if it doesn't go higher, you keep rolling, collecting more premiums. Now, if you are wrong, the stock price goes down, at least calendar spread has a pretty good protection to the downside risk, right? You could be wrong like 3-4%. I mean, if the stock price drops 3-4% after after you enter the trade, the calendar spread should still be doing fine, right? So maybe I show you one example here. Yesterday, so NVIDIA, right? So let's talk to NVIDIA. This is the Wave Rider account where I have 15 trades here, including the 10 new trades that I entered last e-gathering on Monday. So as you know, on Monday I enter a trade on NVIDIA, and this is what? This is a C trade. This is a C trade. Let me show you the detail here. Let me open this one. So why well, how can I know this is a C trade? Well, you look at this. I enter a trade with two legs. Leg number one, I bought 180 call expiring in March, which is long dated, right? Which is about 4 months from now. And I sold a call, also 180 call, but expiring on 5th of December, which is 2 weeks from now. So basically same strike price, different times. So that means it's a calendar spread. You see, it's a calendar spread here. So it's a C trade. Now I enter with two contracts. So what happened when I entered this trade on Monday? Well, I entered the trade on Monday, and you know what happened yesterday, right? NVIDIA dropped $5 yesterday. There was time when it dropped even $10, $11, but at the end of the day, when it closed down $5. So imagine you enter the trade and the stock price dropped $5, right? You thought that would be bad. But hey, you look at the P&L of the trade, this NVIDIA trade here, P&L open is the profit or loss since I opened a trade. So since I opened the trade on Monday, which I have not drawn or anything, I just opened the trade and the stock price dropped immediately after that, $5 yesterday, which is about 3%, right? What happened to the trade? Well, you see the trade is actually making some money. That's what I'm talking about. Calendar spread has a very good protection on the downside. So in this case, when I enter a calendar spread on NVIDIA, I was expecting the stock price to consolidate or eventually rallies, right? But I was wrong. The stock price dropped $5 straight to my face right after I entered the trade. But hey, the trade is not doing badly. Actually, it is making some profit, small one. That's what I'm talking about. That's what I mean when I say good protection on the downside, right? So what happened in this trade is that, yes, when the stock price drop, it will hurt my long call. You see the long call lost $505, but the short call here lost even more. The short call lost 523. And because I am short the short call, so that's loss become my gain, right? Become my gain. So then my gain is more than my loss. So that end up with a net gain for my trade, right? So that is the intent of the trade, right? And if you look at the P&L, if I open the position there, here's a trade with 2 contracts on NVIDIA after I entered and the price has moved, right? So the price yesterday moved to 117, which is around here, 117, 118, not 117, 118, which is around here. That's why it is making a small profit. But now today, it indicating that the stock price is rebounding to about 180 or 181, which is around here. This trade should make more profit today, right? Because you see the curve here, it will make a little bit more profit than it is right now. So in my NVIDIA trade here, if the stock price drops on the way to 174 at the expiration, the trade would still be breaking even, right? But of course, if it dropped today, then it will be incurring some loss. But if I hold it until the expiration, which is on the 5th of December here, then the trade will turn to a break even, right? Now the stock price is moving back to 181. The market indicates that it will move to 181. And if it stays here in the next 2 weeks until December 5th, guess what? This trade would make this money. This trade would make about $550 before rolling. Before rolling, it would make $500 plus. So it's very good. As long as it stays within the profit zone and the time passes, it will bring more profit. Think about this one. Stock price right here and kind of making a little money, right? Look at the way the time move. This is the time. Today is 26, right? Tomorrow, which is the market close, but the decay will still happen. Then will be Friday, will be here. Next Monday, next Tuesday, next Wednesday, next Thursday, and next Friday. End of next Friday will be here, right? So and so on and so forth. The longer it stay around here, the more it will bring profit in when the time passes, right? So that is the intent of calendar spread. You are paid to wait, right? If the stock price moves nowhere, it's okay. It will bring profit when the time passes. So that's what I mean on entering with a calendar spread, because you keep collecting rent while waiting for the stock price to go up. Now, Step 2, you need to be nimble. When you see the price starting to increase or rally, you need to make a decision whether you want to upgrade your trade to a diagonal spread or not. If you are right, you upgrade it, then it will give you a lot more profit. If you don't, then the trade will be stalled and you could lose money as well. Why? Imagine the stock price is right here. Now, what if there's some good news in NVIDIA company, and then the stock price suddenly goes up a lot? If it goes to 185, it's still okay. The trade would still be profitable. And especially if you hold until expiration, it would still be profitable. But you see, the profit will reduce. If you pass the 180 and you leave until expiration, you see the profit will reduce. And if it moves up too much, like beyond 188, your trade actually start losing money, right? This is a zero line, right? This is zero. So you need to make sure that as the price starts to rally, you need to eliminate this one. You need to eliminate this loss zone. So how can you do it? Well, you need to upgrade your trade. So after you upgrade your trade, the chart, this chart, the P&L chart doesn't look like this anymore. It would look like this. It will look like this. Yeah. So then you don't have the loss zone. Now, if the stock price goes higher, you make more profit. If it goes up too much, yeah, you would still make profit, but the profit will be reducing, but not going below zero line. That's the intent of upgrading, right? So that's what I will demonstrate this one to you later on. When the market opens, I could upgrade this trade if I'm bullish. Or I have a few trades like this. I think I have Amazon, I have SPY, same markets now going up. I may want to upgrade them. So I will come back to this again when the market opens and I show you, here's the chart before upgrading. And then I simulate the upgrading order and show you the chart after upgrading. And if I'm happy with that, I will execute that rolling order. And then after the order is filled, then the chart will look different. So that's the intent. But you need to upgrade your trade. Otherwise, if the price move up too much, your trade could fall into this loss zone. So that is a step 2. It's important to upgrade your diagonal spread, right? To ride on uptrend. Now, if you have been in a trade for some time, like NVIDIA trade, today is a day 3, right? Day 0, I entered day 1 yesterday, day 2 today. So after 2 days, I already got some benefit from time decay, which is good. Now, if I upgrade it, then I will pay less debit. But if I just enter and I need to upgrade it immediately, then I have to pay a bigger debit, right? So that is another thing. If I don't upgrade it today, I wait until Friday or I wait until next week when the stock price has not moved anywhere, then the upgrade will become even better because the current short call will keep decaying. So when I upgrade, that means I buy back the short call. So the longer I hold it, the more decay it will be. And therefore, when I upgrade it, I buy it back, I will need to buy it back at a cheaper price. So that is the time decay benefit, right? So again, but if I wait and the stock price immediately go up, then it will make the rolling very costly as well, right? So it's a very dynamic way. Now, if you are completely new to option, you may not understand what I'm saying, but that is fine because you have not learned it yet, and you just start learning and then practice it, and we will see how it would do for you. Okay, so again, this C2D is designed for choppy market when the market can go back and forth. You like NVIDIA yesterday dropped, today it looks like it will go up, right? Very choppy, and that's a good way for you to start the trade. And then if you are bullish that NVIDIA will recover in the long term, then that could be a very good strategy to use as well. Okay, now let me explain a bit because the market has not opened yet. Let me continue to explain the C trade. The checklists that you need to prepare before you enter it. Check the stock needs to have a good liquidity, so it needs to have weekly options, right? You cannot just trade the stock without weekly option. So let me show you. Obviously, NVIDIA, it has weekly option here. You see in the option chain, there are many weekly options. That's a good sign that the stock has good liquidity. But not always have, I mean, some stock do not have the weekly option. For example, the FactSet, FDS, you see there's no weekly options. So those stock typically have very low liquidity. I just avoid those, right? Only trade the one that have weekly option like Amazon, Google, Meta. The Max 7 has very good liquidity. Yeah. All right. So focus on the stock with good liquidity. Technical setup. This one I show you on Sunday, right? I prefer dip on the uptrend, on consolidating or bottoming and ready to rebound, or the stock price is, what is it? Yeah, basically neutral to moderately bullish. So those are the setup. So later on when we do the real trade, I will show you the chart and you will see most of the candidates I'm considering are in this kind of setup, right? Neutral to moderately bullish. The construct of the trade would be you buy a long call with 3 to 6 month expiry and you buy at the strike price near at the money, right? So if NVIDIA is trading at 180, you buy 180, right? Short call also you sell at 180, but with the shorter expiry, normally 2 to 4 weeks. I prefer the shorter one, but the shorter one has lower premium, so I need to strike a balance between shorter to longer DT. My preferred one is 2 to 4 weeks, right? And the good thing about the C trade is you know exactly how much your max loss in the trade, right? So NVIDIA costs you 1,200, for example, for the capital at the entry. And that is the max loss. You cannot lose more than that, right? No matter how far the stock price moves up or down, you cannot lose more than the capital you pay at the entry. So that is a risk defined. Yeah. Check the top of the profit zone, right? The top end of the triangle. See that one divided by the capital, which is the debit of the entry. See if you can get at least 25% or not before you roll, right? Before rolling. More than 25 is good enough. Yeah. And ideally, if you've been in the trade for a few weeks or a few months even, and you roll many times, you would be able to achieve more than 25%, right? And my profit target is anywhere between 50% to 100%, right? And the P&L, the profit zone that you see in the profile, ideally that profit zone has about 50% probability of winning. That would be good. Sometimes I go with like 40 if I still like the trade, but 50 or above will be better. Now that is for the entry rules, right? That's the checklist that you need to go through. Now, how about the exit rule? In what scenario do I exit the trade? Well, 3 scenarios. Scenario number 1, if the price stays flat, this is a good thing for the trade, right? Keep rolling the short call to the same strike price, expiring maybe 1 or 2 more weeks out. Keep renewing your rent contract, right? Keep finding new tenant to rent your home, right? So that is the first pricing scenario. Pricing scenario number 2 is the price starts to move up, rally. So then, as I said, you need to be nimble enough to upgrade your C2D, right? So then you will eliminate the loss zone in the upside, and then you will create a lot more headroom for the upside. Yeah. So then your D trade diagonal spread would have no risk on the upside, And then if the stock price goes higher, you keep rolling it and you can collect a very good profit and take profit between 50 to 100%, 150% return on investment. Worst case scenario is after you enter the trade and the stock price collapses, right? That's what happened, right? So like yesterday when NVIDIA drops $11, it went to a loss. It went to the loss because it went beyond the break-even point. But it recovers at the end of the day, so it's okay. But what if it doesn't recover and it continue to decline? Well, then your trade will be at a loss, and then the loss could snowball, right? As the stock price continues to drop, then the loss will increase. And in that particular scenario, guess what? Just cut loss at 50% of the max loss. Max loss is the entry debit. Remember the entry price you pay, like $12 or $1,200 for one contract. You cut loss at $600 loss. So if the trade hits $600 loss, you cut loss. Yeah, so that is the worst case scenario. When it drops like that, you need to cut loss at 50% of the max loss. Now that is C trade. D trade, as I said, you need to upgrade your C trade to D trade when the stock price starts to rally. So when you upgrade, what does it mean? It means you buy back the short call, right? So 180 for NVIDIA, I need to buy that one back. Now, after I buy it back, right? So buy to close the short one. Next step is to sell to open the new one. So I buy back the 180 call and I sell to open the new one, higher strike price, further DTE. So I will sell 185, expiring 1 week after that or 1 to 2 weeks after that. So by doing that, I will create a lot more headroom for the upside, and I will eliminate the risk on the upside. Now, when I upgrade my trade, I could have to pay a debit. But it depends. If you've been in a trade for some time, the time decay in the short run has kicked in already, then chances are you can upgrade your trade at zero cost, or even you are paid to upgrade. That's the best scenario. You upgrade and then you collect extra premium for the upgrade. That's the best thing that happens, right? But if you just enter the trade for 1 or 2 days and you have to upgrade already, then chances are you need to pay extra cash to upgrade. Yeah, it's like you upgrade your apartment to a penthouse, you need to top up a cash. Yeah. Now, once you upgrade your trade to D or diagonal spread also have two legs, similar to the C trade. Now, the two legs of diagonal spread has two legs, right? Number one, the old leg is actually the same leg of the C trade. So it is the first one is the same leg, the one that you do not roll. That one stays, right? That one stays. Lower strike price now, long dated expiry. And the new one you just do it here, will become part of your new trade. So the new short one will be at the higher strike price and shorter DT compared to the long DT. Yeah, to the long call. So that will be diagonal spread. Now, some of you asked me during the e-gathering that, hey, if you are bullish on a trade, why don't you go straight to a D trade? And my answer is yes, you should go straight to the D trade if you are so convinced that this is a bullish setup and the price will go up from here, right? Then you go straight to a D trade because that will have a lot more headroom for the upside and it has no risk on the upside, right? So if you are convinced that this is a bullish setup, go straight to D trade, which is diagonal spread, and you don't have to start with a calendar. All right, so we still have 10 minutes before the market opening. Let me just review what we are offering here. So Pina Profits offering a mentorship program, which is, I tell you, very crucial, right? Based on our own experience, right? So Adam talked about it, and you will hear more from YY this coming weekend. Myself, I also went through that experience. We learned option many years ago, and we did not have mentor. We did not have a community to communicate with, right? So when we have questions, we don't know where to go. So that is where we design this mentorship program to help you. We have the ecosystem, we have community, we will have everything for you to reach out to understand and clarify your learning. That's the way for you to learn the fastest. We did not have this luxury many years ago. And now we understand the pain point that people have when they learn options, like very complex, very overwhelming. Then we have this program to help you to go through it. Yeah. So the program has not just the lesson itself, but also have a mentorship uh, workshops, right? So, but let's start with the lessons. Well, in the lesson we have two levels, level 1 and level 2. Level 1 basically cover the basic of options, what options is all about, put, call, sell, buy, volatility, Greeks, and all those fundamentals are the basic thing of options to let you know. Like for example, when you start learning driving a car, right? At least you know, okay, rear mirror, mirror, and then you have the seat belt, you have this and that. So that's the basic thing, right? And then level 2 teach you on the techniques, right? On the advanced strategies, multi-leg strategies, even more importantly, the psychology, how to build your portfolio, how you mentally prepare for tough times, right? Costly mistakes that people make, right? And then so that you don't have to repeat it. So lots of things in level 2 there. Yeah. So level 1 again cover the basic options, and there are basic strategies as well for those who want to start with a very basic strategies like selling a cover call or selling a castle put, yeah, their boom call, their bear put as well. And then there are strategies, two-leg strategies like boom put spread, back on spread. And we also teach some of the technical tool, and we have some bonus strategies on level 1. Okay. Level 1, what is basic? It is a foundational one and a crucial. It's very important. Uh, I tell you my own experience when I started learning option many years ago. I thought that I know option, right? I told you I trade option for 20 years now. But the first 7 years I went nowhere. But I kind of understand the concept of options. So I thought I already very good at option when I came to the class. The class taught me a very basic thing, put, call, volatility, risks, but it opened my mind. I thought I understood that one well, but in fact I have a wrong understanding. And the course actually taught me here's the right way to understand about options. Then there's a lot of aha during the training. So similarly, if you are not like a rookie, start from scratch kind of trader, you thought you know option, I strongly recommend to go through option level 1 as well, because there are a lot of things there that I am sure that you may not know. Yeah. And then level 2 brings you to the next level, multi-leg strategies, advanced strategies, strategies that you cannot find anywhere elsewhere, right? Because they are invented by me or by Adam, right? So we do have different buckets for different direction. Moderately bullish or moderately bearish strategies, then neutral strategies, aggressively bullish strategy, aggressively bearish strategies. They're all there. As I said, there's a still special situation strategies as well for you to play earnings or some of the event. Very importantly, we have lesson on psychology and risk management, where I share with you a lot of costly mistake I made. Right, some advanced technique on options like rolling, when to roll, where to roll to, and then what are the considerations, right? We cover the brokers trading platform setup and analysis, uh, and we use Tesi Trade, Interkey brokers, and of course Thinkorswim, because Thinkorswim we use the most in the lessons. So you have big one brokers there. We cover all of them, right? I also added the lessons on how to enhance your return on the cash that you parking in your account, waiting for the right time to enter, right? So then how can you get extra income from it? And then we have a bonus strategy used on the back ratio and the collar strategy as well. Again, some people ask me, okay, if I'm new, I'm completely, noob, right? I'm completely new. I scared of complexity thing. I'm very slow on a learner. I'm not good at math. I'm very afraid to start. What if I make a wrong mistake? I tell you, those are common questions or concerns that people have, right? Um, as you start doing something new, you always have this kinds of fear, always there. That's why we understand it. We design a system that help you guide you through the whole process, right? And you see it very complete, very comprehensive here. So we have so if you sign up on the mentorship program here, you have 1 full year of mentorship by Adam, me, and the coaches. Uh, for you to start, we have bi-monthly. So every 2 months, we have webinar live by Coach YY here. He walked you through the basic step, how to set up your platform, how you place the first trade, how to set up the charts, how you get started, basically. Every 2 months, you have that live. And then between YY, me, and maybe another coach, we do have a monthly deep dive. So every month you have one deep dive webinar where we zoom into one specific or two specific strategies, and then we explain in details. More importantly, we answer Q&A live, right? And I tell you, people find very helpful in those kinds of webinar. This is the best, right? Every month, like some of you already experienced this one. Last Monday, which is the last Monday of November, right? So I conducted a training, the e-gathering. So every last Monday of the month, except for the December, because we go on holiday, I would have a e-gathering. Now, in this e-gathering, I cover many things. Now, I cover the market updates. I cover, portfolio review, trade that I closed, trades that are still open, how portfolios performing. And I spend a lot of time answering a lot of questions and topics you send in. And finally, I also go through many of trade ideas and enter using my real account. And not just entering it, you will see me following it through, adjusting, rolling, closing, everything until the trades are closed. And that's by watching it, by doing it, by practicing it, you will be able to catch up very fast. Yeah. We also have a dedicated chat group for those who join in, and there you can ask your questions, and we are there 24/7, right? And you almost get the answer instantly from us. Quarterly, Adam will have the webinar for psychology, which is very important in trading. Again, many testimonial people have sent in. This from Lucio, small account, but grow nicely, 42%, right? This is from Andrew, again, sharing a very nice return year to date, hitting 250K profit, right? And he also set some milestone. He hit like 100K in May 2025. And the year before that, 2024, December, he recovered on losses that he had before he joined this community, right? So it's very important milestones. People very proud sharing their achievements, and I mean, lots of story you see in the community like this. And then we have Gumit, right, who said option striker level 2 and option shell level 1 both are very impressive. Cat say I enrolled 1 year ago, but I never do anything until this May, and now portfolio is up 23%. Egan also say I realized profit 1,200 and unrealized profit 2,300 from NVIDIA. This is the best investment I have made for myself by attending your courses. And I strongly encourage those who have not enrolled for your course to sign up. Yeah, people very consistent sharing their journey and testimonial. We did not ask them; they just voluntarily sharing it. Jan Kunang, for example, shared the journey, right? And then he said he struggled at times, but still above S&P 500 by the time he shared this one with us, right? And then TK, very long message here, but TK said, I came to Retail Rebellion, which is a mid-year event in last July, where I was introduced to option trading. I was intrigued and signed up. And he said, next month, I immersed myself in the online videos daily. And honestly, I heard my Master Wang's voice more than my wife's during that period. I placed my first option trade in August. And now, 3 months in, I'd like to share my result, not to brag, but to validate the teaching and hopefully inspire others, those who might be in the same shoes I was in. And he shared, I think he got unrealized profit of 4,002 and then realized profit of 1 point something, too small for me to read. So within 3 months, he already got the profit more than the cost fee many times over, actually, right? So again, just summarize. Now market is opening, but just quick summarize on this one, and then we go to the market. All right. So option wave rider mentorship here. Remember, it has the course. The course have 26 powerful strategies. Right. So the course is a pre-recorded videos. You can watch whenever you want, at the pace you want, at the time, at the place where you want. Right. It's very flexible, and you have email support if you want to ask email, or you can ask also in the Discord channel. You have monthly e-gathering with me where I do live trading like what I did last Monday. Deep dive strategy every month, either by me or by YY or another coach. And then we have a Discord channel, right? And then you have a quarterly webinar with Adam on psychology. And every 2 months, you have an onboarding workshop with YY if you are new, right? And the total package is 2,997. But if you enroll it now, we offer at 50% off. So very affordable one. I tell you this one, right? So 1,499. It could be a big amount of money for many of you, especially for those who are new, young, just started working. I tell you, when I started learning option, I think 13 years ago, the basic course where they taught me options, call, put, sell, buy, volatility in Greeks. That's it. And classroom, 2 days, it already cost me $2,000. 13 years ago, $2,000. That course did not teach me anything, just the basic. And then after that, I have to learn another course called Iron Condor. And I paid another $2,000 for Iron Condor alone, 1 day classroom training, 1 day. And then we still use the paper to draw everything, like very manual. And one off, no support, no community, nothing. Just 1 day, come to the class, pay $2,000 to learn one strategy, Iron Condor, $2,000. Just give you an example. Now you have the full package, 26 strategies plus the basics one, psychology one, and then you have the whole mentorship program where you have like every month webinar here and there, right? And then you have the community chat group, and you have e-gathering, you have live trading from me. So you have so many things, and it costs you only 1,498. Much cheaper what I paid like 13 years ago. Despite the fact that the inflation since then, right? It could have been like 4,000 by now, and this one is 1,000. I tell you, this is a very affordable, and that's the intent. We did not want to put a big price tag there because we really want option to reach out to many people as we can, and that's the intent, right? So we really want to empower people to make money like we are doing. Yeah. And then if you sign up, you can get extra 2 months bonus as well. So you got 14 months, not just 2 months, not just 12 months, right? 14 months. It just take a few good trades for you to make back the mentorship program fee, right? So you saw this one from Asanka, right? I'm pleased to let you know that my portfolio has grown 28% in 7 weeks, purely from option trading, which helped me recover on the cost fees many times over, right? And you have Daniel, say my account turned from negative 7.8 to realize to profit 6.5 within 3 months. So he joined my a Wave Rider, and he joined my monthly gathering, right? And then he turned the loss into the gain. And then he say, what I have learned from Master Bang from the courses and gathering is completely game changer. I can be a testimony that the investment for these courses are paid back in within a month, right? And we have Delightful Kiwi also explained to other members that, hey, why don't you just go to this Black webinar and join this one and see how much, and you can easily make it back, recover the cost fee within a month here, right? That's what Kiwi said, right? And then some members can tell that he's making like $2,000 a month with $30,000 capital by just using one strategy called cash secure put. Okay, CMK also just sent us recently, right? Wave Rider class. So he joined Wave Rider class on 1st of August, and the cost fee had been fully recovered. That's same, right? Same message. And he said, Bang doesn't just teach textbook, he walks the talk. Josh also share a lot of learnings, and he also showcased he's made like $47,000 profit. So in August, $38,000, and then yeah. So this is one thing. This is something you haven't seen on Sunday. I think yesterday Adam sent this one in the Discord channel. I think you can look up on YouTube. Just look up how he 7x his account. Right. This is the video where CK interview YY. So YY is our coach, one of our coaches, and he's going to talk this weekend. And it's very inspiring interview, very short. I think it's about 15 minutes interview, in which basically he explained how he grow his account from I think from $38,000 here, $38,000. Yeah, so he grew $38,000 into 255,000 now in 3 years. 3 years time. This is 3 years time, right? Almost 7x account. And in that short video, he explained a lot of things that I find very relevant. I think it's very relevant. If you are the small account traders, right, who doesn't have big account, this could be a very good story for you to listen to. He explained that before he learned from Pira Profit option program here, actually he lost 100,000 K by going to some chat group and people recommend to buy this or to sell that, and then he just like went nuts, and then he lost 100K, and he said that actually 100K is worth 10 years of his saving. 10 years, because he just started working about 7-8 years ago, and he lost 100K on the saving he had until then, right? And then since then, how could he turn the whole thing around, right? So then when CK asked why is it at that time you already joined PP, right? Why don't you just learn the lesson from Pina Profit lesson, and then from there, and he say, it's very interesting. I had the very lame excuse, which is I have no time. And he explained why he used that excuse to agonize the learning, because he doesn't want to spend a lot of hours watching the video and stuff like that. But at the end, he say it's very costly because it blew up his account, $100,000. And then after that, he really nailed it down, and then started to learn properly from the online videos that we have there. And some of the learning he mentioned in the videos, like you need to get a mentor to guide you, because if you just alone, very hard for you to go in this journey. Really need to get a community to go with, because sometimes the market is so volatile, right? You can feel very stressful, and you could feel very bad if the market goes to a sell-off, right? And then he say, okay, he like trading option more than stock. He did trade stock and he did trade forex before, but he say, you know what? In trading stock, you can set a stop loss, but when the stock price gaps down, I lost much more than the stop loss, and that happens to stock, right? When you trade stock, you set a stop loss, but the earning is bad, the stock price open gapping down, you could lose a lot. So the stop loss doesn't help, but option can. Option can you help define the max risk, and you can never lose more than that, right? And then you get the mentorship from me and from Adam, and he's a testimonial saying options are very powerful in the hand of people who get educated. If you're if you are not educated by proper option lessons, it will be sell explosion, right? It will be a sell explosion for you. So it's a powerful weapon, but you need to know how to use it. And then he says since then his account has consistently growing, and then he say that right now if the market has a big sell-off, he can still sleep very well because he know the max risk of his trade and he can sleep very well, right? So those are the very interesting point that why talk during the short video that he has there. Market has now opened for 12 minutes. Just give me a few more slides and we're done, right? So what if I want to stay consistently updated with option markets and outlooks without spending hours researching? Well, we have this OTP for you, right? The one I will show you some of the activities later on. So Option Tactics Playbook is my service. It's like you come to my restaurants, I cook for you. You see my cooking as well. If you already learn how to cook, then you can kind of make sense seeing me cooking. At the same time, I serve the food. If you like a certain food, you pick and eat, right? You don't need to eat all of them because I serve a lot, right? Then just pick and choose the one you like to eat the most, yeah? And I do have the monthly review for this OTP, where I go through the market updates. I go through the detail of each of the trades, either closed or is that open. I send proper notification every day, whether it's entry or exit or repairing the trade, right? Testimonials very powerful, very positive on OTP. According to my trading log, I make $11,000 on my OTP account, around 45 to 50K, right? So that is from John, from Mahmoud, Adam Bang saying, thanks is not enough for you, for what you have done. Great community. You transform my account from being a major loser to almost 2 years into a profitable one, less than a year, 27.5% return on investment. Again, let me skip through all of this, right? So now you can choose to sign up on the option Wave Rider mentorship alone, or you want to buy the bundle, which have the OTP service together. So that's what I will show the detail here. Just remember, the first part is Wave Rider mentorship, right? Cost you $2,997 before discount, and then we have OTP, which you have monthly gathering, monthly webinar. And in fact, I'm doing the weekly now, right? Not a promise, but I always do more than what I promise, right? So monthly is the minimum, but many of you know I do weekly now also. I have dedicated channels for it. You have a tracker, you have watch list, and so this one costs $2,500 before discount. So total will be $5,497 before discount. If you enroll in the bundle right now, we offer 45% discount for both, right? Combined, so that is $2,997. Again, $2,997 probably just equal to what I paid 13 years ago with the inflation adjusted, right? But 13 years ago, I only get the basic one. I tell you that. And now you get extra 2 months for both Wave Rider and 2 months for Option Tactics Playbook as well. Now OTP for you will start in January because you need some time to learn, right? So you will not benefit if you just sign up and know nothing and go to the OTP. So better to learn first, and then starting in January, you will be part of the OTP community, right? So I flash the screen here with 2 QR code, right? Before we can go for live trading right now. So just let me see. This is a discount, and then 45% discount for the bundle as well. And then remember, you have bonuses with 2 months extra for each of those, right? So the two. So the next one will be hunting, but we just take maybe 3 minutes break, everyone. 3 minutes break. I go for a bio break and get some water. I will come back and we will go hunting together. All right. So give me 3 minutes, everyone. Hello, welcome back. Yeah, hello. I hope you can hear me. Good, thank you. Good, very good. Hey, market has opened now for 20 minutes. And let's look at the market right now. So very strong opening. Right now, market is opening up. S&P 500 is up about 60, so 0.6%. And Nasdaq is up also about 0.6, 0.7%, so almost 1% each. And then we have gold kind of up slightly, and we have Bitcoin recovery a little bit. Bitcoin has been selling off over the past few weeks, and today kind of stabilizing. Ether also stabilizing right now. Nvidia strong recovery from yesterday. And then we have flat Apple. We have very strong recovery on Microsoft, which is good. This is a little bit, I prepare a trade on Microsoft, and this one is running up already. That's okay. So Meta a little bit pulled back today after 2 days rally, and then same thing. Google yesterday was up to on-time high. Today it's selling off a little bit, and Amazon is flat. Tesla slightly up, and Netflix is up as well. So okay, market looks pretty strong right now. But again, it's still early, only 20 minutes, and we'll see how it goes for the day. But so far, so good. Yeah, so this very good market, and that's it. And this, I have different accounts. For example, I have a larger account. This one I show you on Sunday, right? I have this large account, $1.8 million, and this account alone year to date profit is already 720. So this account is doing very well for me, and I have two other big accounts in IBK as well. So let me go back to the smaller account. This is the one that I use for the e-gathering. The e-gathering, like Wave Rider e-gathering. So last Monday, I used this account to enter new trades. And the reason why I use this account for now is to demo. So do some of the rolling actions, and you can see it live as well, especially for those who joined me on last Monday. You will understand what trade I'm talking about. But later when I do the real trade for the trade hunt today, I will use the larger account here, because I don't want to have the new trades here to mix up with the dedicated account for the e-gathering. All right. So now let me start with the e-gathering trade here. Now look at the portfolio of the e-gathering. We have 15 trades available. They are on open here. Today the portfolio is up about $800, which is good. Now, but look at it, it's very difficult to understand. Do I need to take any actions on any of these trades or not? Very difficult. So that's why I rely on the tracker. So this is the Excel tracker that I use to not only track the Wave Rider trades, but also OTP trade, also my personal account trades, right? So same format, same Excel file, but I do have for different portfolio. Now, let me just use this 10 trades. This is a 10 trades that I enter last Monday, which is November 24, right? So for those who join the e-gathering, who sign up already and join immediately on Monday, you know these are the trades I enter on last Monday. They are on November 24. And you see last Monday, I enter calendar spread, C trade, yeah, right? One C trade, two C, let me change the color. So one C trade here on Amazon, one C trade on CRM, one C trade on Nvidia, right? And then one C trade on Uber, and one C trade on Gold. So I enter 5 calendar spreads on Monday on these 5 stock: Amazon, CRM, Nvidia, and Uber, and Gold, right? You see calendar spread, calendar spread, calendar spread, calendar spread. Now, on top of the 5 calendar spread, I also enter diagonal spread on Palantir, which is a D trade. So I went to the D trade immediately on Palantir because I'm more bullish on Palantir. And I also enter a D trade on AMD because I also bullish on AMD. I also enter a D trade on SPY, which is SPY, S&P 500 index, because I'm also bullish on SPY. So those are the 3 D trades. So in this case, I did not enter C trade for those, but I enter straight to D trades for those. On top, I do have bull call. I have a bull put as well, right? Now, so for the 10 trades I enter on Monday, how are they doing, right? Overall, they are doing okay. So 10 of them now making about 305 or $300 profit. Some trades is losing, some trades is losing here, and many trades are making profit, right? So how do I review this one, right? So first of all, is there any actions that I need to take on this trade? First, I can see that I need to take action on the C trade here on Amazon, because when I enter the trade on Monday, the stock price goes at 225. Looks like the stock price had jumped quite a bit to now 230, $5 jump, right? So, and it's kind of going outside the profit zone a little bit. And that's why you see the trader is losing some money. Now, at the expiration, this loss will turn to profit, but today is losing. How could it be? Let me show you the chart of that trade. Amazon here, the trade I'm in is this one. Today, P&L today is 26, yeah, today 26, right? Today is 26. 26, you see, the stock price is right here. And that's why this is losing some money, because it is below zero line, right? But if the stock price just stays right here on the expiration, December 5th here, this small loss here will turn into a profit, right? So if the stock price stops going up and just stays right here, 2 weeks from now, on the 5th of December, this trade from a small loss will turn into a $300 profit. That's how it works, right? Theta, time decay, will bring in the profit. So then the question here is, if I think the stock price has stopped going up right here, then I just hold. I don't need to take any action. I let the time work its magic. I let the time work its magic to turn the profit, to turn the loss into the profit. How do I know the time will do the magic? Well, look at this. Today is 26, right? And let me show you this one. Right now, the stock price is right here. And what is the current P&L? The current P&L is a small loss, $31. But if it stays here every single day passes, it will bring me $30 time decay benefit. So the loss right now will turn into a profit tomorrow, because after today, it will bring me $30, right? And that will offset the small loss here. So tomorrow, this one will turn into a break even. And the day after, it will turn into a positive number, right? So just look at this. Just look at this. Today is 26. Look at this. I will simulate this time passing. You will see the P&L change. Today is 26. It's losing 31. I don't know. Tomorrow, so there's some wonkiness there. But 2 days from now, you see it should turn positive. And then as the time goes, every day it brings some $30, right? So that will be $40 profit, and then profit will become 77, and will become 130, 120, become 126, become 212, become 271, become 326. And you see the pink curve keep rising, approaching the blue curve, which is the profit at the expiration. That is the magic of time decay, right? So bring this one back today, 26. We're still losing a little bit money now. Now with the price moving down, the loss is improving, right? So do I need to take any action right now? It depends on where I think the stock price will go from here. If I think the stock price kind of finding some difficult to go higher, just hold it here. Just hold it here. Don't need to roll, don't need to upgrade, don't do anything, because time will bring more profit to the trade. And if the stock price goes down a little bit, that will be even better, because then it could potentially reach much higher profit, right? So now you see earlier this one was gaining, now it's losing, which is good for the trade, right? Good for the trade. And the time will bring some money at the end of the day, right? Gradually from now till the end of the day. So you would be able to see this one turning into a profit end of today or tomorrow. You will be able to see it, right? So now it looks like the market is selling off, losing some momentum here. Most of the gains is now being erased, right? So this becomes good thing for this trade. But this trade, because the price has gone up so much, I need the price to pull back a little bit towards the middle of the profit zone. And that is the best sweet spot for the trade. So with that, if I think that supply is going to retrace a little bit from here, or at least not going up from here, I do not take any action. I do not need to take any action from now. I just let the time work its magic and turn the trade into a profit. So right now, go back to the tracker. The trade is still losing $31. It should be exactly what the thing showed me, right? But if the stock price goes down further, this loss will be improved and it would turn into a profit. Yeah, the tracker here tell you delta, net delta of the trade, that is negative. So when you have a trade with negative delta, that means the time the price decline will help the trade, but the time increase will hurt the trade. But in any case, you have a theta, which is a time decay for the trade. Time decay for the trade is positive here, which is good. Every single day, it brings me $32. Yeah, so that's how to read the tracker here. So in this case, in this trade, do I need to upgrade the trade right now? Maybe not. I see the momentum is losing right now in the market, and probably this one will be declining or at least not going up very strongly. So I probably just leave it here. I don't want to take any actions. This one should turn around soon because it has a very positive time decay. Next one, CRM. So CRM, when I enter the trade, also C trade, right? C trade, I entered when the stock price is at 230. Right now, the stock price is exactly at 230. So the price has not moved at all. Today it dropped $4 because yesterday it went up $4. Right? So today it went down $4, so essentially erasing on the gains yesterday, which turns out to be a good thing for the trade because 230 is a sweet spot for the trade. That is a short call strike, right? So if the stock price continue to stay here, time again, this one has very good time decay. Every single day passes, this one brings me $96 a day. $96 a day. Right now, the stock price is right at the middle of the profit zone. I do not need to take anything. The trade is now making $50. No actions needed. You want to see the same P&L curve of CRM trade for the Wave Rider? Here we go. CRM. This is a trade that I entered last Monday, right? You see, right now the stock price is right at the 230. And that is a sweet spot because that is a point where we could potentially hit the max profit. The longer it stays here, the more it will bring the profit in for the trade. Right? So then potentially, you know, the best case scenario for this trade is on the December 5th, the stock price stays at 230. End of that day, the trade would make this guys of profit. How much is it? $1,800 profit. $1,800 profit at the top. That is the best case scenario. Of course, it's very hard to get the best profit, right? Most probably I will get somewhere in the middle, somewhere here, somewhere here, somewhere here, maybe here, maybe here. Very difficult to get the top here, but it's the best case scenario, right? I don't expect to get the best profit, but occasionally I could get it. But before that, I could roll already. So this is the very good trade that I'm in right now, and the stock price is right at the sweet spot, right? The trade is making $45 profit every single day. It brings me another $95 time decay benefit. Very good. No actions are needed right now. So this trade is good, profitable right now. How about the calendar sweat, the C trade on NVIDIA? NVIDIA, the stock price recovers a little bit from yesterday's sell-off, and right now also very near the sweet spot, right? 179, very close to 180. So the stock price is near in the middle of the profit zone. And similar to the CRM trade, this one also bringing generating some profit, and it has very nice time decay benefit, $38 or $40 a day. So again, you can do the same thing, go back to the chart and type in the NVIDIA, you will see the chart, the P&L curve, very similar, right? So this is a curve for the NVIDIA trade. The stock price is right here, right now, and very near the sweet spot. The sweet spot is here. Yeah, very good. No actions needed. Time decay is very good. So if the stock price stays right here, you can also move the vertical line here. You see how much is that the theta per day? Theta per day is $63 a day. Very good. Yeah. No actions needed. Again, when you trade option, right? They like this one, you have the friend called time works for you. You have the friend work for you. So you don't have to do anything. Just let your friend work very hard to bring your money. So every time you look at the tracker here, you see positive theta. That means you have some friends working for you. You have a negative number, that means that one works against you, right? And the reason why this one has a negative number, because it has this is a different strategy. This is a boon-con spread. Boon-con spread always have a negative theta. That's why I don't use boon-con spread a lot. Why US uses a lot? But for some reason, he will explain to you why. But I prefer to use calendar, diagonal, boon-bang collar, and Cao Chi Minh, except for boon-bang, the rest have positive delta, theta. Time decay works in my favor. So imagine the whole 10 trades here. Every day passes, it brings me $600 from the theta alone. Theta means time decay. These 10 trades bring me a net $600 a day. So you just go to bed. Tomorrow you wake up, you see $600. Assuming other factors are unchanged, time like price or volatility is unchanged. It's just on the time decay alone. 10 trades bring me $600 a day. Man, this is good, man. And I do not use a lot of capital. How much do I use for these 10 trades? I use only $24,000. $24,000 and you get $600 a day from the time decay alone. Of course, sometimes you have heard because of price movement as well. But let's just take a look at the time decay alone, assuming the price doesn't move. $600 a day, right? So, and then 30 days a month, right? Because work, this one work like both weekend, weekday, doesn't matter, right? So imagine like 1 month you get what? 1 month you 30 days, right? You have $18,000. That's a lot, right? Maybe better than your salary today. That's for many of you, right? Again, this is a ideal scenario. Of course, you have other factors that affect the trade as well. But just imagine, I love the concept of time decay. That's why most of my trades, I construct it in a way that it has very good time decay. There is a $628 a day. You can see it in here in the portfolio. You also see very similar numbers, right? You have theta. Now this one has only 360 because it has some own trades. The 10 trades I show you are new trade. Some of the own trade has a negative theta here. Then I may need to close them soon, right? But for the rest of the 10 trades, it has very good theta. And let me check out my bigger account here. You see, this is my bigger account. I also have positive theta, right? This one I have smaller one. This one I use some neutral strategies, so therefore I don't have much of the theta decay, but it's okay for $140 a day. But this one is better, $360 a day. And for the 10 trades here, $600 a day. Yeah, that's good. All right, so no actions is needed for Amazon, for CRM, for NVIDIA. How about Palantir? Now, Palantir, I enter the trade straight as a diagonal spread. Right? Diagonal spread means I'm bullish. And the stock price went up further. So the stock price went up to 165, which is above the short call. The short call is now in the money. Do I want to upgrade the trade right now or not? Right? Technically, I do not need to do because the trades, the net of the two legs is still positive delta. That means I still get some benefit if the stock price goes up slightly higher from here. And at the same time, I'm paid to wait. So theta time decay works in my favor. The trade is now profitable. But if I'm very bullish on the stock, I may want to roll it right now. When I roll it, that means I upgrade my D trade to further D trade. I mean, even higher level of D trade. That means I will roll this short call up. Let's say I roll it to 165, right? To create more headroom for the upside. So I will buy this one back. This one will expire next week, not today, or not this week, 9 days from now, next Friday. So I need to buy that one back and I sell to open the new one. So in this case, I upgrade even the D trade from the D trade to the D plus trade, right? So let me look at the chart of Palantir. If I really bullish on Palantir, I may want to upgrade it today. Yeah. Let me look at the chart of Palantir and I will decide. Right, Palantir opened up, but now gaps down a little bit, but still up versus the opening. So apparently it is losing some momentum. It is losing some momentum from the largest chart. What I'm seeing here that the stock may be losing some momentum here. Opening strongly, but now kind of pulling back. Maybe I do not want to upgrade it today. It looks like it losing some momentum, right? And I don't want to roll and then the stock price pulls back down, and that's not good from the timing standpoint. It looks like losing some momentum. You see, it losing some momentum here. Okay, so it's good. Then, so in that case, here's a P&L chart, the P&L curve for the Palantir trade, right? So Palantir trade, if the stock price stays right here, it's still okay for the trade, still in the middle, kind of in the middle of the profit zone. There's plenty of headroom for the upside. So I don't need to be rushed to roll it up right now. Because right at this price, if the time passes, it can also bring very good profit for the trade. So I won't take any rolling action today. Rolling means I will create even more headroom here like this, right? Create more headroom, but I wait. I would rather wait because if I roll it out further in time, the time decay benefit will reduce also. So it's okay. I think that the price is still somewhere in the middle of the profit zone, which is very ideal, right? So I'm holding on. No action also on the D trade here for Palantir. How about Qualcomm? Qualcomm is a bull put spread. It is going up slightly, yes, today, but yesterday it dropped a lot. So that's why you see bull con spread here. You have negative theta, and you have to be right on the direction on the price. So in this case, I entered a trade when the stock price was at 165, and the stock price dropped to 163. So I am wrong on the direction. That's why I'm paying the price. It is hurting now right now. And if the price doesn't go up very quick, very fast, then every day passes, this one will bring more loss to the trade. So this is a losing trade. That's why I'm this is not my favorite strategy, the bull call. I only do this when I have very strong conviction that the stock price will go up. So in this case, I have that guy's conviction, but then I am wrong because the stock price dropped after I enter it. Now another C trade, which is Uber. I enter with the strike price of 85. Today the stock price goes back down to go back up to 85. Yesterday it dropped, but today it's up to 85 nearby here, right at the sweet spot. So that's why the trade is making good money. Yeah. And then time decay works in my favor as well. Very similar to other C trade, no actions needed. The stock price is right at the sweet spot, no actions needed. All right. Next one, bull put spread. Is a bullish trade with the positive theta, and today Microsoft price went up very strongly today, which bode well for the trade, right? So in this case, it's a bullish trade, and the price went up. Yesterday actually down. No, yesterday early yesterday it was down, but closed yesterday up. So today continue to see a positive action here. That's why the trade is making nice profit. So this one, once the price move into the trade favor, you don't need to do anything. Just let it go. Time decay works in the trade favor. The price now moving towards the positive side for the trade. No actions needed. If you want to look at the chart of the bull put spread on Microsoft, here it is. Right, so this is the bull put spread with the break-even point at 457. Right now, the stock price come somewhere here, still very far away. For me to lose money, the stock price needs to drop a lot, right? So, but the price going this direction, so then the trade is making nice profit. There's 76% chance that this trade will be profitable, right? And now you see it is making some profit right here, some profit. If I keep the trade, the longer I hold the trade and the longer the price stays right here, the more profit will come. And at the end, the trade could hit about $600+ profit, right? So time works in my favor right now, right? I don't need to do anything. If you move the vertical line to the current stock price, you will see that the price is, the time decay is positive. Every day it brings me $7 a day. Very good. No actions needed. Very high probability of winning at this juncture. Yeah, this one is fine. What else? I have in the way rider trade. So that Microsoft SPY, since I entered the trade, this is a D trade. I enter it as a D trade and the sub price went up. It's now 677. And that is way above my current short call, right? So I entered with a long call at 665, short call 668. Now it went to 678, basically 10 points above my short call. And that's why it capped the upside now. The trade is still profitable, very minor, but it has a negative delta, meaning if the stock price continue to go up from here, it will hurt the trade, right? So this one probably I need to roll. I need to upgrade my D trade to a further D, right? So D plus. So here's a P&L of, hold on, let me, yeah, here's a P&L of the D trade on SPY that I'm holding in this portfolio. Yeah. Okay, so here's a trade. When I enter the trade, I place my short call at 668, which is somewhere here, or 667, somewhere here. And right now the stock price has gone up to here. Right now it's here. You see, it is on the way to go out of the trade profit zone, right? And this is a loss zone. D trade here, but slightly D trade, means slightly bullish. So that's why there's still loss zone in the upside. The bullish D trade should have no loss zone on the upside. Right. So this one, if I think the supply will continue to go up, I better upgrade my trade right now, right here, right now, to make it like this. And no more loss zone on the upside. All right. So that means if I upgrade my trade, that means I will buy back this short call. The 668 here, I will buy it back and I roll it up to currently maybe 6, 7, 8, 10 points up. But 10 points up, I will need to upgrade significantly and pay a lot of money for it, right? Let me see which one is a good way. Definitely, I want to upgrade this one because it's very close to going out of the profit zone already. I want to upgrade it right now. So I'm doing the real rolling for you to see here. So I go to the option chain. What I need to do is to buy back the one I want to upgrade, which is the 668. This is the original short call. I need to buy this one back. One contract here. This is the position. I will buy back and I will need to pay a mark price, which is about 1,300, right? 13 times 100. So 1,300 to buy it back. So then I will sell a new one to collect some money to offset part of the cost here. Yeah. So let me see which one is a good one. Okay, let me let me see if I can roll it out for 1 week and see how much I need to pay. If I go to 1 week, this is December 5th, right? If I roll it up to December 12th, which is 1 week, you will see how much I need to pay. So I buy back this one, 668, and I pay 1,300, right? $13 times 100, right? And then I will find which one I will need to pay. I can collect about 1,300. So if I roll to 671, which is three points higher, right? This one, if I sell 671, expiring 1 week later, I can also collect about 1,300, right? So then it will offset. It kind of upgrade with no extra cash, no extra capital. But I can only upgrade up 3 points, right? So I create some more headroom, not significantly. The sub price right now is 667. If I roll it to 671, then it's still in the money and it still cap my upside. So I want to upgrade further. What if I upgrade to 675? That means from 668 to 675, that means I increase the headroom by 7 points, right? $7. This one I can collect $10. So I buy back, I pay 13, and I sell new one, I collect 11. So I still need to pay about $2 for the upgrade. Yeah, not too bad. Pay $2 for the upgrade, but I create $7 headroom. Think about it that way. So let me show you that kind of upgrade. So this is not a full upgrade. This is like halfway upgrade because I upgrade to 671 means I think the stock price could drop back down to 671. Sorry, 675. So I don't upgrade all the way to 678. Right. So in this case, I want to upgrade, but I'm cautious if the stock price can move back down again. Right. So then in this case, I will buy this one back. Buy back, right? And then hold the control key. I will sell the new one, 675. Right. So in this case, if I upgrade from 668 to 675, I need to pay a debit. This debit, $240 is incremental capital that I need to pay, or incremental max risk for the trade, right? I add the max risk to the trade. I add the capital to the trade. It's like I upgrade my 3 bedrooms to a penthouse and I pay extra cash. Now, if I do so, how will the P&L look like? So simulate this one. If I upgrade this one, I simulate this one with the simulation. How will it look? Let me check. So I need to tick the current position and assume I will execute this rolling order at the same time. How will it be, right? So it will look like this. So by the expiration on December 5th, how will the chart looks like? It's a bit laggy. So let me show you the chart after the upgrade. Yeah. So the chart will looks like this. The chart will looks like this. You see earlier, this is a 2 break-even point, right? This 2. But now after I upgrade, I actually move my break-even point. I shift my break-even point or profit zone up. I will shift my break-even point or my profit zone up here. So then I will create more headroom for the upside. So if the supply goes up further, it will not go out to the loss zone. because it will still be within the new profit zone. So that is the intent of upgrading, right? Upgrading. Now, if I really want to upgrade fully further, like let's say I go on the way to 678, then I need to pay more. So instead of upgrading to 675, I will now upgrade to 678. Straight to 678. Then in that case, you see, I will need to pay more. So no longer 200 plus. Now I will need to pay 400 plus. But if I upgrade that much, then later on you will see the profit zone will be extended even further. This is the old one. Let me show you the new one. It's lagging because the market is moving. So if I upgrade everything, okay, how can it doesn't disappear? Maybe I go back here and go back here. Give it a few seconds, it will show. Okay, so here's a trade. If I move my short call all the way to 668, then my profit zone will be shifted even further here. Then I don't have to worry about the stock price going higher, because it goes higher, it will benefit the trade more. So you see, every time I roll it up, right, you will see my profit zone will be shifted towards the upside, and therefore I will reduce the risk on the upside. But of course, if the stock price goes back down, then I will have the risk on the downside, right? So in this case, I will have to pay a higher debit to upgrade. It's like upgrading to a full house, but now I upgrade it to a mansion, right? Beautiful house. Then I have to pay higher. Yeah. Now, occasionally, if I'm very bullish, I can upgrade it on the way to like 678, right? I can upgrade to 680, or I can upgrade it to 685, for example, to create even more headroom for the upside. If I am super bullish, right, then I can upgrade it even further. So you see, if I upgrade to 685, there's no more risk in the upside here, right? The stock price can go high and then it's still very profitable. So it's the art, right? It's not science. You have to see where the stock price go. So in this case, net, what do I want to do for this particular trade? Well, I am not sure. The S&P 500 has run up few days in a row now, and it could have some resistance at 685 soon. I think it will continue to go up further from here, but I don't think it will up a lot. Maybe I will upgrade it, but not to 685. Maybe to be cautious, right? I just upgrade it to 678, which is a current stock price, right? If the stock price stays right here, that is a sweet spot for my trade. By doing so, I will need to pay $448 for the upgrade. Yeah, everyone? I'm doing right now, and then after I upgrade it, I will send the notification to the Wave Rider members, right? So here you go. I can negotiate a little bit because I have only one contract, so I just do it for one contract, right? So then I negotiate. I want to pay less, and then I can negotiate from there. So let's start with $4.45, right? And send. All right, so now I have sent my order out, and you see the order is in here, right? Queuing. Looks like I need to raise the price, the debit, to be higher to have it fill. So let me raise it to 450, 453 to have the chance to be filled, because that's the current market price. So 450 debit to upgrade my trade. Yeah. So now my trade has been upgraded. My rolling order has been filled here. You see, I close the one. I buy back to close the old one, the 668, and I sell to open the new one, 678. So I upgrade my trade by 10 points. and I pay $453 for the upgrade. So now my new trade has a lot more upside. Yeah. No, where is it? Okay, here we go. See, huge headroom for the upside here. All right, so that is a SPY trade. What else? Gold. Do I need to upgrade the gold trade? Probably I need to do so also. Gold trade is profitable right now, but again, similar to the SPY trade, it has negative delta because the stock price has gone up so much, 5 points above the current the short call. So this is a C trade that I enter. I need to upgrade this C trade to D trade. So perhaps I use the same analogy. I upgrade the 337 to about 383 and out to one more week, right? One more week, and then I will I have a better headroom. So now I will upgrade the C trade on gold as well. So gold, as you can, let me go back to the position here. Sorry, GLD. So here's my GLD P&L today. Move this one back to today. Yeah. So GLD P&L curve right now, before I roll, it is like this. Okay. So it is profitable right now because it's still in the profit zone and it curve up. So above zero line. So that's why it's making some money. But it is going outside the profit zone soon if I do not take any action and the price keep going higher. So in that case, I may want to run it right now. I want to upgrade the trade right now. If I think the trade will be fine and the stock price stop going up, then I hold it here because that will bring some extra profit here. But if I'm bullish that gold will go up, then I will upgrade this one like this, right? All right, so then I look at the chart before I decide to roll. Let me look at the chart of GLD. GLD retrace and now on the way up is near overbought. So I need to be careful. I want to upgrade, but I don't want to be too aggressive because it's overbought right now. And there could be a resistance here. So it could go up a little bit and then go down. It's okay. I think it's okay to upgrade to the current stock price, which is 280, 382 or 383. Because I think this one normally it can go a little bit further and go down. So this one potentially I think it will hit this support, this resistance and go down from here. So it's okay to upgrade it now. There's still some room for the trade to go further up from here based on the technical setup. So then I will upgrade my trade right here. Similarly, I will buy this one back, right? So I pay $8.30, and I roll to the week after, which is December 12th. And let's see which one I will collect about $8.45. $8.45, I will need to upgrade it to this one, 380. So that means I can upgrade 3 points. This one I pay $8.45. This one I will collect $8.37. It's almost free upgrade. 3 points. But I want to upgrade a little bit more, then I need to pay, right? Because if I upgrade to 382, which is the current strike price, the current stock price, I will collect only $7.30. And that means I need to pay a net debit of about $1.30. Yeah, so that is smaller cost to upgrade. So okay, so I don't mind to upgrade to the current stock price, 830, 382. Right, 382. Then I will pay $1 for the debit, extra cash, extra capital to upgrade. How many contract do I have for this position? This one I have 3 contracts. I have 3 contracts, so I have to times 3. So I pay $300. So that means 1, 2, 3. So I need to upgrade 3 contracts altogether. So I need to negotiate. Let me start with $1 instead of 1.03. Now I'm queuing to get my order filled. Looks like I need to raise the debit to get it filled, right? Because the mark price is 102. Okay, so let me raise it to 102 debit. 3 contracts, that means I need to pay $306 for the upgrade. Right. So let's see if I need to raise 1 more cent. The price is going up. It's fine. It's more expensive. Okay. So my order is filled right now at $1.03. For 3 contracts, I paid $309 for the upgrade. So extra cash to upgrade my C trade to D trade. All right. So by now you have seen me do a demo of upgrading my trade, right? From C to D or from D to D plus, right? So next one, because this is the Wave Riders trades, I need to inform my community members of the actions that I just took. I just showed you live here, so you see whatever I do on the day to day, you do it. You see it behind the scene, right here, right now. Okay, so let me go back here and inform my community members. Okay, so first of all, let me just capture the screenshot of my trade. Here we go. Capture the screenshot of the trade that I just enter. Then I will inform my Wave Rider members. So there are 2 groups. Group number 1, e-gathering, which is the Wave Rider. The moment you sign up, you're part of this e-gathering. Then you see me posting this one, the actions that I am taking. The other one is a masterclass, the one that learned directly from me live. And I do have that class once a year, right? So next one probably in April. I don't know if I'm going to do it. But typically I will inform them that this is the content I just here's are the trade actions I took for the e-gathering trades today. Today is 26. Okay, so I told them the first one that I wrote is for the DS, which is D trade, right? DS trade on SPY. I just wrote the short call 668. Remember that one? Is that 668? I run the shotgun 668 to 678, right? To 668 up to 678. So I've upgraded 10 points up and expiring 1 week after that. So that will be 12. So 1 week later to create more headroom for upside. Right? So that is the first trade. The second trade is the C trade, right? C trade on gold, GLD. I just rolled the short call. The short call is 377 to 382. 377 to up to 382. Expiring also 1 week later. So which is a 12 to also create more headroom. Create more headroom for upside. And the second one I wrote here, after I roll the C trade up, then it will be effectively converting the trade into a D trade, the D. Okay, so C trade, upgrading it, then it will be converted into a diagonal square, right? So that's what I am going to inform my Wave Rider member, and if you're part of it, you should be able to see it now. Yeah, so now I already sent and it's in here. And now you check the Discord channel, you should see it. And I do the same for the masterclass student. They're also part of the e-gathering, right? So I inform both groups. Now, if I do the same thing for OTP, then I will do the same thing. I also inform that. So that is the demo of rolling, right? So that is, let me show you so now we're done for the trade actions for the e-gathering today. Now let me open the tracker for the the OTP to see if I need to take any actions today for OTP trade, and I do the same, and then I will inform my OTP members as well. So if you sign up the bundle, you have both. You have the e-gathering trades and you have OTP trades at the same time. So here are the open trades on the OTP, the tracker. So I have different trackers for OTP trade, and I reviewed it earlier. There was only one trade that I could potentially have to upgrade. This is the one. NVIDIA, I have, this is the D trade with the strike price, the short call strike at 175. Today, the supply recovers to 180. So perhaps I need to upgrade it because otherwise it will have a negative delta here. So I will upgrade this one, and perhaps I need to upgrade this one now also. So these both I need to upgrade, and this one expiring this Friday, so I can roll it out maybe 1 or 2 weeks and converting the trade into a further D trade, right? So that is the one I will do. Now this one I will do it on the thing IBKR because the OTP is in IBKR, but I can show you on Thinkorswim as a simulation as well. So let's say I have to do it on Thinkorswim. I will show you the trade and VDR, right? So then I will buy back the one that expired today, this week, 175, where I will pay $5 plus, and I roll it out to next week, which is December 5th. Let's see if I roll it to 180, I will pay a small debit. So in this case, you see, I upgrade my trade by 5 points, but I pay only a little debit to upgrade, which is good. 180, if the stock price stay at 180, then time decay works in my trade favor. So with that, I go to my OTP portfolio. Here you can see OTP portfolio and NVIDIA trade, where I will go to the one that I want to upgrade, which is the one that expires this week. 2 contracts, I buy back, right? I buy this one back, and I go to December 5th, which is the week after, and I upgrade it to 180, right? So 175, upgrade to 180, and 2 contracts, I need to negotiate the debit. So I want to start with a lower debit, 69 cents. And raise the price gradually from here. 70. 71. Yeah, so 71 cent debit has been filled, right? So you see here, the order has been filled here. So I do the similar thing. I copy the screenshot of the rolling order. Right? And then you can see the rolling order screenshot right here. Right? And normally I just highlight this one, rolling. 2 contracts, paying 71 debit. And I do the same thing for my OTP members. I go to OTP. There's OTP. Here you go. Yeah, so then I will go to OTP notification. I say, for the DS trade on NVIDIA, I just roll the short 175 up to 180, expiring on December 5th, 2025, which is 1 week later, to create more headroom for upsize. And I tell them also the rolling order has been filled at what price? At 71 cents debit. Yeah, everyone. Yeah, so now if you are part of the OTV community, you got to see this notification I just sent. And tomorrow, when the market close, I will send out the proper writing structure kind of notification. Today, it's just a quick one so that people know that I'm taking this action. So this trade has been upgraded. The second one, this one also moved up a lot, and I need to upgrade this one as well. This is a D trade already, but I want to upgrade this one further to create more headroom for the upside. Then I need to buy back the 82 strike expiring today, this week, and I roll it up to next week, right? So similarly, I can do it on here for you to see. This is Marvel. I buy back the one that expired this week, 82, 82. And then if I roll it to next week, I need to roll it to, let's say, to 86, near at the money. This one I can get a credit. Why is it? Because the next rolling will be crossing the earnings. That's why even I roll it up, I could get a credit. So in this case, normally because the earnings coming, right? If I plan to hold through the earnings, I want to create a lot more headroom in case the stock price goes up after the earnings. So in this case, not only rolling up to 86, I will roll it up further, let's say to 88. Even roll it up to 88, I still get a small credit. So in this case, you upgrade, you get paid at the same time. Yeah. If I go to 89, yeah, I pay a little debit. So let me see 88, 89, which one I prefer. 88 is somewhere here. Maybe I go 89 because this one, the high will be 95. I just, yeah, but a little bit overbought here. But anyway, I think the stock price will continue to go up a little bit further from here. So I tend to go up a little bit further to create more headroom. So maybe I go to 89. Even I pay a few cents for the rolling. It's okay, just a little capital. But I have one more point for the upside. You see, if I roll to 88, I got a credit of 17 cents. But if I roll to 89, then I need to pay a little bit wonky. Okay. 88. A little bit wonky. Okay, maybe 88, but I will negotiate. Maybe I can get at zero debit, right? Let's see. 88, which is above the current stock price and almost at no cost. So let me do it. Marvel. Two contracts also. I buy this one, 82, and then I roll to next week and 88. Right? Two contracts. See if I can get a credit or not. Let me start with a credit and I will negotiate from there. So start with a credit, which is I'm paid to wait. I paid to roll, right? But I doubt I can get the credit. Reduce the credit. Yeah, actually I still get the credit. So I got paid 10 cents, which is $20 for two contracts for rolling. So I roll my my trade up. So I upgraded and I am paid at the same time. And in this case, because the one that I roll to will cross the earnings, that's why you see premium will be better when you roll to after earnings. Okay, so I do the same thing. I will just, sorry, this one, I don't use this one. All right, so then I inform my members, same thing. So this one for the D trade on Marvel, I just roll the short call, 82 short call up to 88 expiring next week also, 1 week later, to create more headroom for the upside, and the rolling order has been filled at 10 cents credit, right? So this is credit. So I'm paid for the rolling. Yeah. So now if you are part of the OTP community, you would be seeing this, right? So that's rolling order 2 for the Marvel trade. What else do I need to take? I think AVGO could be the one because it's also have a negative delta. The trade is making good profit right now, approaching my profit target already. But let's see if I can roll this one up a little bit. Right now, the stop price is at 395, and this is deep in the money already. Still have some positive theta, so mean I can still wait. But I just want to create a little bit more headroom. Maybe I roll this one up by 5 points. See if I can roll it up 5 points for a small debit. So I just upgrade gradually to reduce my negative delta here, meaning stock price goes up will hurt me less, then I may do so. Right. So that means I need to buy back the 365 AVGO, and buy back the one that expires next week, 365. So I need to buy back this one and paying like 2,900. And let's see if I roll it out to 370, expiring the week after. This one I also get a credit. You know what? Because it's also crossed the earnings. Earning for AVGO, this one, the December 5th, will cross the earnings. So that means I can roll up a lot because the premiums we good. So then let's see if I roll it to 375, I still get a credit, right? So I roll up 10 points. I am paid to for the rolling. Let's see if I roll it to 377, and there's no strike. If I roll it to 380, I need to pay a debit. 380 is not too bad because 380 is still in the money. It's still in the money. If the stock price continues to go up, 380 is better than 375. Let's look at the chart. Wow, the stock goes to new on-time high today. Okay, looks like very strong momentum. Typically, if the stock breaks out to the new on-time high, it will continue to go higher. All right, so maybe I roll it up to 380. So that means 15 points up and pay $200 for the rolling. Or if you want to be conservative, I roll it to 375 and I am paid $110 for it. Maybe I go this one because my trade anyway near the profit target anyway, right? So if the stock price go a little bit further, I think it will hit my profit target. Maybe I roll it up 10 points and get paid for the rolling. I think this is more defensive play. Yeah. So I roll it up 10 points. So then AVGO. I think I will close the trade before earnings because profit is approaching my target. I think by the earnings time before that, it should hit my profit target. All right, so I close this one, 365, one contract here, and I go to December 12, and I roll it to 375, 10 points up. All right, 10 points. Call 365, roll up to 375. And I think I got a credit of 85 cents here. Let's see how much credit I can get. Let me reduce the credit to have the order fill to 79, 75, 72, 70, 67. The price is a little bit wonky though. Okay, so I got fill for 67 cents credit for rolling the shotgun up 10 points, which is a very good rolling. So I upgrade my apartment and I am paid some cash for the upgrading, which is very good. So in this case, I roll this one to the one contract here and I got paid $67 for it. Okay, so then same thing. I inform my OTP member. So for the DS trade on AVGO, I just roll the 365, right? 365, is that 365? Yeah, to up to 375, expiring on I think it's up 12 because I roll the 5th to the 12th of December, which is 1 week later to create more headroom for upside. The rolling order has been filled at 67 cents. that 67 cents? Yeah, correct. Cent. Done. So I done the 3 rolling for my OTP trades today. And I think that's it. The rest I have reviewed it. I think they are on fine. Okay. So just show you how to upgrade your trade live, right? Using the real example in both OTP and also in the Wave Rider accounts. And for those of you who are in both, you see the update instantly from me. So that's the way, I'm doing every day, just to show you how to take action on a day-to-day basis. Now it's about 12, and I think in the next 30 minutes I should be able to finish 3 trades for today. Let's go. Right, top 3 trades. The one that I prepare is Microsoft, and a little bit unfortunate because Microsoft has gone up today. A little bit too late, but okay. I think it's still okay to enter right now. The reason why I am very confident with the Microsoft trade, because it has pulled back a lot, and it has been able to help to hold on this 200 moving average support. This is a 200 moving average support. First time since the April liberation sell-off. It tested that, and then it held above that for 3 days, and today it's rebounded, right? So if I'm neutral, I just enter the trade near at the money, call it 485 strike, buy a call, sell a call. If I'm more bullish, I go straight to the D trade, right? So let's be cautious first, because it went up quite a lot today. So let's start with a calendar spread on Microsoft, right? And then if I am bullish, I can always upgrade the trade, similar to what I showed you earlier. All right, so then I will buy a call near at the money. Near at the money means 485, right? And 3 to 6 months. So I prefer to buy an option that expires after the earnings. So earnings for Microsoft will be somewhere in January. So definitely I want to buy somewhere like Feb, which is after the earnings, because after earnings, the option will hold value very well. So the typical trade would be I buy near at the money, which is 485 here, expiring, let's say 3 months, right? 3 months. You can do March also if you want. And then you sell 2 to 4 weeks, let's say 2 weeks. This is actually less than 2 weeks, but it's okay. So then the trade could be like this, right? You buy 485 at the money, expiring in 3 months, and you sell 485 expiring in 9 days. 9 days here will decay very fast, and you can collect what? You can collect $670 from the sell call, yeah, and that will reduce the cost of the long call quite a bit. The cost of the long call is now $27. So after you do both legs, you will cut the cost by 1/4, yeah, more than 1/4. So from 27, you cut it down to about 20. Yeah, so you cut almost by 1/3 actually, right? So that's the trade. So buy here, buy at the money here, and then sell at the money as well, right? So then I pay a net debit, which is also the max loss of the trade, $2,000. $2,000. Yeah, both at the money. Right. So what is a P&L profile look like? Analyze. Right. So this is the P&L curve. And where's the break-even point? The trade will have the profit zone between, call it 475, which is $10 below the current stock price. And on the upside, the break-even point is here, which is 498. 498 is like $13 above the current stock price. So the stock price needs to drop $10, or it needs to go up by $13 to go out of the profit zone of the trade. if you think that in the next 9 days, including the holidays in between, if the stock price move that much, then you want to construct different trade. But if you think it's still within that range in the next 9 days, then this is the right trade for you, right? And the max profit is here. Let's call it 500 something. You can hover the mouse here. You can see the numbers below here. You can see 510. So 510 is the max profit before rolling, right? 510 divided by the max loss, which is capital, 2060, 25%. Just barely meet my criteria, right? So criteria is the max profit should be about 25% or more. This is just barely hit that one. And the reason for it, because the short call has only 9 days, not 2 weeks. Right? 2 weeks, you would have 25 and above. And even 9 days, you have actually shortened trading times also, right? You have full holiday tomorrow. You have half day trading on Friday. So actually only 7 days. So this is a pretty decent return on investment considering that, right? Now, if you want to go for a longer trade to have more time to roll, then you can go to March as well, but the cost will be about $400 more. If you go to March, you have to pay $400 more. Right? So now I just use pham to reduce my cost. Now I will use different account. I don't want to mix up this one with the Wave Rider account. So I will switch this one to my bigger account and I keep my live trade hunt trades right there. So it's a big account I have here. Right. So now I'm entering this trade right now. In this account, I have no Microsoft. I don't have Microsoft trade. I prepare for it here, but I don't have it yet. So let me close it here. So you see, I don't have Microsoft trade anything yet in this account. So then when I enter this one, I will not mix up with, other trades I have. But even that with the Excel tracker, I still can monitor them, right? So let me negotiate this one, right? Let me start with a lower price. Let's say 62 and cent. Right, so got fill already. 2062 here, fill at 2062. You see it, right? I'm now in the trade, and now you see in my portfolio there's a Microsoft trade, which I just entered today, right? 485, 485, buy, sell, and I'm in the trade right now. The trade is losing $2, and that's normal. Normally, after you enter the trade, you see the P&L will be a little bit plus or minus small profit or loss. That's normal. The thing here is you look at theta time decay, right? So this trade will bring me $22 a day, $22 a day, which is very good. Weekday, weekend doesn't matter. It brings me $22 a day. That is a good thing, right? Tomorrow, day off, I also get $22. Friday, half day, I also get the $22. Saturday, I also get $22. Sunday, I also get $22. That's the thing. That's where money is coming, right? So now I'm in the trade, and you can see that if I show my position here, yeah, so see one contract, I just enter and the trade looks exactly what I showed you earlier. Got it, everyone? First trade, yeah. A little bit unfortunate that the price has run, but it's okay. I think it's not too late. I think the rebound just started. I think it will have a little bit more room for the upside. So be ready to upgrade the trade in the next few days or next week. The same way I show you when I did with Wave Rider accounts and also with the OTP accounts, right? Next one. So you see very fast, right? Once you see me doing few times, you see it can be very efficient. So that first trade. Second trade is ExxonMobil. Now on Sunday, I show you different trades. I showed you SPY, but SPY have run already. I show you Amazon. Amazon have run already. Too late. I don't want to chase the girl. So now I change the two the Amazon and SPY. I replace them by Microsoft, and ExxonMobil. And let me show you the chart of ExxonMobil. So XOM, you look at the chart. Let me cancel the trade answer. I prepare the trade right here. Let me cancel it. Yeah. So let's look at the chart of ExxonMobil. Why I like the chart? You see from the chart, right? Looks like the whole stock has been consolidating or going sideways for the full year. And I believe if you go to 3 years, you see very similar pattern. Now, what I like about it is like this. Do you see like high lows? That kind of trend looks very good for me. Moving average, 200, 150, 150. They're all sloping up. Not like parabolically up, but steadily up, which is beautiful. Just good for this C trade, right? And recently you see up, down, every time it spike, it retrace, spike, retrace, up and down. Right now it's right back down towards the end of the trading channel. If I need to draw a trending line, right, it will be like this and it will be like that, right? So right now it retraced back down to the lower end of the trading channel, and then I think there's a good chance that today is just the beginning of the rebound, and then it will be higher from here. So to be cautious, I want to enter as a calendar spread near at the money 115, and then when it's a confirmed bullish spin bar, then it will be a good time to upgrade the trade, right? On the other hand, the stochastic also show that the stock is near over sold. So I think it could go down a little bit from here, and then after that, it will bounce off this technically, right? So technical bounce, you see it. And in the past, you see every time it hit near the overbought here, right? Last time it has it, you see the bounce, right? The time before that, you also see a bounce, right? The one before that, you also see a bounce, right? The one before that, you also see a bounce, right? Every time it hits this level, you see a bounce. Very consistent, right? Every time. So now it near that level. I think it's just a matter of time. Very soon you see this bouncing again. And then when you see that, you need to immediately upgrade your trade. Yeah. So that's why I like this this setup. And let me simulate the trade for you to see. Now this trade, maybe I do a little bit different. I may be buying a longer DTE instead of Feb. I buy a March, because actually this stock, the premium is so low that even if you go to March, you see the premium is very little. So this stock is very suitable for small account traders. So if you have a small account, this one is it's a very low cost for you, right? So it's a good thing, right? So now you so enter the trade, buy near at the money 115. This one I pay only $5 plus. Remember the Microsoft I pay like $27. This one only 5, and this one is even longer. This is like March. The other one is only Feb, right? See, this one is cheaper. And then you can sell, maybe this one you can sell 3 weeks, you can sell 2 weeks, up to you. 2 weeks is good enough. 2 weeks you also get a decent premium here, right? So you pay $5.70, and then 2 weeks, actually got only 9 days, you get back $1.60. $1.60 out of the 5.7. Man, it brings the cost down quite substantially, almost 1/3 also. So buy this one and then sell 9 days, 15 strike. Then that brings the cost down to only $4.17. So one contract will be $417. Right? So for those who have a small account, this one is good. You cannot lose more than $417. One contract. I want to increase the number of contracts to make it more worth my effort, worthy, right? So then I increase it to 3 contracts, but you can always do 1 contract. Up to you. You want to practice, 1 contract is good enough. I just want to make sure it's worth my effort. So then let me analyze the trade. 3 contracts here. And the trade has a profit zone between 112 and 118. 112 is around here. So it need to, oh no, actually 112 is here. So it need to drop all the way here to hit my break-even point. And on the upside is 118. So this is a profit zone of the trade. So if I believe the stock price will continue to be here in the next 9 days, then this will be a good trade, right? Now, if I see a big spike, then I need to roll this one up to create more headroom until here, something. That's where I need to upgrade my trade. Right now, I'm not so sure. I think this one could go down a little bit from here to get below the overbought oversold region, and then we'll rebound from there, which is just nice for the trade. All right, so I like this trade, and max profit will be 376, right? The top here, 376, divided by 3 contracts of this one will be 3 contract will be 1, 2, 7, 9 or 6, 9. Okay, let me do again. Okay, this is 376. That's the max profit divided by 1, 2, 6, 9. That's the cost of 3 contracts. 29%. Very good. 29%. So decent profit zone, decent max return on investment, and also the profit zone looks good from the chart standpoint. I can negotiate. Let me start with $4.23. Now it's here, queuing here. The mark price is now, okay, I got filled already. $4.23. Sometimes you just need to negotiate harder, right? Now it's in here. So let me show you. The Microsoft trade is still here, now making $3. The new one I just entered is XOM, right? I'm in the trade now making $1.50 or $3 profit. Same thing, huh? 3 contracts here. Just enter it. And the theta, look at the theta. This trade will bring me $18 a day. $18 a day. Microsoft bring me $21 or $22 a day, which is good, right? So you see, if you have trades that bring some money every single day like this, beautiful. All right, so then that is the second trade. Again, if it hits my stop loss, meaning if it drops a lot, hit my 50% of capital, then I will cut loss. But now I think we are safe right now. Last one is ACN. ACN is a trade I'm looking at. Let me look at the chart of ACN today. ACN. ACN is down by $1 today, which is just fine. This is the same chart I showed you on Sunday, right? The stock price has been consolidating this one for a long time. And looks like it will continue to fluctuate around this level. And not just the 243 is not just the support line. If you zoom it out for, let's say, longer time, let's call it 5 years out, right? 5 years in the past, you see this 243 has been a very strong support many years ago, right? So dip, bounce, and then recently it dipped, hold above, and every time it hit that level, it bounced off that level. So it looks like it's a very strong support. I think now with earnings coming, then it could be interesting, right? This stock could gap up, gap down, depends. But let's see. Let's construct the trade and we'll think about the earnings, right? Let's go back to the daily chart. And I use the same construct as Microsoft. Let's say I buy February, right? At the money. Now at the money by right, it's 248, but I don't have 248. Maybe I will still buy near that, so that 250, because 240, yeah, 245 is okay. Actually, 245 is okay. So 248 is somewhere in the middle, right? 248 is somewhere in the middle. So either I have to choose 245 or 250. Let me show, let me see, let me start with 245, which is slightly in the money. Ideally, if I could find 248, that would be better, but there's no sustain. So I will buy 245 and I go to 9 days and I sell 245. Right? So then my trade will cost me about almost 1,003. That will be 245, 245. The 245 expiring on December 5th here, I collect $6, almost $700, right? And that reduce the cost of the trade by 1/3, right? So instead of 19.8, now I'm paying only 12.9. So I cut the cost by 2/3, by 1/3, right? I pay only 1/3, 2/3, right? So let's analyze the trade first, and then we talk the earnings. Now this December 5th will not cross earning. This one will not cross earning, but we will talk about next round when we roll that will cost the earning and what we need to do with that, right? So let's check the profit zone of the trade. So the trade has a profit zone between 236 and 255. That's a profit zone. 236. Where 236? 236, which is around here. So that means the stop price need to break the support and kind of hit that 236 somewhere in the middle here. And then on the upside, that will be 255, which is about here, right? The profit zone is not great. It's not like huge, but considering the stock price has been like keeping in that range for quite some time, there's a good chance that it will continue to stay within that range. I'm not worried much on the downside, to be honest, because it has very strong support here. I'm worried that the supply could break out very fast, very soon. Okay, so in that case, I need to be nimble to upgrade my trade immediately. So that is from the chart. Now from the risk profile here, you have max profit at 433 divided by 1295, 33%. Yeah, pretty good, pretty good. So I like this profile, right? So the earnings will be what? When the earning will be no earnings still far away. Sorry, I'm making mistake. Earning will be somewhere like 19th of December. So you don't have to worry about now. At least this drone, there is December 5th. Next drone, it's still before earnings. The following one I have to worry about. Now I don't have to worry about. I think this one is fine. Okay. One contract is okay. The price are a bit wonky. Let me start with 1290 and then I will negotiate from there. What is it about? Oh, okay. It say that my price, I think I got something wrong with the price. Rejected. Oh yeah. I put the wrong one. That's why it protects me actually. I put 19 something. I mean 12.9, but I put 19 something. That's why it don't want it rejected because otherwise I have to pay $19. That would be a wrong one and it would be a very costly one. Luckily the broker protects me. So now I put 12.9. That's what I meant, right? But I put 19. That's the wrong one. 12.9. See, earlier I put 19.5. Luckily it rejected. Now I need to negotiate from here to let's say 13. 13.1 13.2 and 13.3. The mark price is 13.35. Yeah, so I got fill now for 13.3. Yeah, here 13.3 ACN trade. And here you have it here. And the trade is making $5 profit right now, right? Just enter one contract. And from the portfolio, it's in here also. Yeah, it's in here. So then you have it. You have the trades, 3 trades that I prepare, and they're on, I think, valid in the current setup. And I will keep updating you. Now, let me put this one later. Maybe after I end the session, I will copy the screenshot of this. For those of you who want to follow, you can screenshot right now. But later on, I will put a screenshot of this one and I post it in the Wave Rider group, right? To tell them that here's the trade hunts details, the detail of the trades I entered during the trade hunt webinar, right? For you to follow in case you want to follow it, right? And then that is just an entry. In the subsequent weeks, you will see a lot of actions that will go on the same way I just posted for the e-gathering trades, right? Or the OTP trades, right? I will keep updating every time I take actions on the trade. All right. That is the live trade hunt. Now I go to the questions. The questions sent to me here. I have 2 here, and I can go to the Q&A later in the chat if I have more time. But right now I answer the one that gets sent to me. The first one from Novi. During 2022, the market is bearish. What strategies did you use? If 2026 bearish again, will you do the same strategies? Now the bear market in 2022 was like not like a sharp decline, but it's a gradual declines, right? And it lasted for 10 months. And that is very tough because at the first few weeks of the decline, you did not realize this is the bear market, because if it declines gradually, the first few weeks or even the first few months, the chart still looks like it is a dip on the uptrend, because uptrend is still up. Now it's dipping. So because of that, I did not use a lot of bearish trades. Most of my trade continue to be a bullish trade because I thought that was just dip on the uptrend. And as a result, I had a big drawdown in 2022, right? I mentioned it on Sunday. Somebody asked me, right? Now, I don't want to short the market because market goes up 2/3 of the time, 70 of the time. So you short the market, that means you have lower probability of winning. Yeah. So in those bear market, eventually I reduce the number of trades. I reduce my trade size. So for example, I don't use up to 70% of my account. Like for example, this one, let me show you the e-gathering portfolio right now. I'm using only, but I only using 70% of my accounts, right? Or less, right? I still have at least 30+% of my account. So that's normal. That is normal level of account utilization. So during the bear market, I tend to reduce my number of trades and the trade sizes to less than 50% or sometimes even 30-40%. So that's what I do. But I don't put bear trades because bear trade have very low chance of winning. And remember, in the bear market, it's not always go down, right? There was day when it had very strong spike up, and that will hurt on the bear trades, right? So then I would choose to reduce the number of trades rather than going against, go to the bear side. Number 2 questions here from Chris L. What if you think it's going up and convert it into diagonal spread, and then later the supply falls? You make a mistake, correct? So that is the worst case scenario of rolling. So the worst scenario of rolling is you are so bullish that the price is now going up and you pay a big debit like the one I did here for SPY, right? This is not even considered a big debit. Big debit, sometimes I pay like even $7 or $8. Most of the time I pay less than $1, like this one. It's normal, right? Occasionally I pay $4, $5 if I'm more bullish. Few times I pay like $6, $7. And that for me, consider big debit. And if I am bullish, I can raise the price a lot and pay a big debit for upgrading my trade. And right after I upgrade it and pay a big debit, then the market drops significantly. And that is the worst case scenario of rolling. And that will be, in the hindsight, it's a mistake. But again, only when in the hindsight, because you only know it when it happens, right? But at the time of rolling, how could you know? How could you have known it? So then occasionally you have that situation. It's like you upgrade your apartment from a 2-bedroom to straight to a penthouse. You so bullish that the property market is booming. And then when you pay a big cash to upgrade your house to a penthouse, and then the whole market collapses, that's where you will regret. But again, in trading, you only know it in the hindsight, but accept it as part of the trading, and that could happen as well. It happened to me a few times. Yeah, so that is the case. But most of the time when I'm bullish, because the stock price tends to move in that direction, but occasionally you will have the price moving down, right? And that will hurt the trade. All right, so those are the only 2 questions I received on my brokers there. Let me finish it, and then I may go to the Q&A in the chat. Okay, so I've done the demo to roll and upgrade my C2D trades. Make the right choice, everyone. The power to grow your wealth is in your hands. And like Aaron, he showed Adam and me the account, and he say, thank you for training. And he say, now I have monthly income from option trading. And he wanted to hit $1 million by end of this year, but he hit it earlier in October, right? So very powerful. So he made $345,000, 52% here, trading options. And Josh, another one, very active member. He share not only great return, but also on the learnings he has along the journey. And lots of people like Josh share their journeys in the community as well. So we have Toby hit a big profit, and he say one of the best decision I made. We have Kong also beat the market. We have Sen Shong also crazy return. Right, we have Chero Fong also hit 61% and great numbers. We have Suran, very active member in the channel, keeps sharing the learnings and numbers, and say I achieved 36% return, 100% from investment, and from both value momentum and iron striker. Yeah, we have Vinlai, from one who knew almost nothing about investing and trading. I came across Beat the Market event, which is last year Meet Market last year, and then were blown away. I am pleased to share that I have achieved nearly 75% profit, right? And he also share on the learnings of this community, the service we are providing, high quality of knowledge of content, extremely knowledgeable and experienced Sifu, meaning master and mentors and coaches, and a very active community with PP students in the Discord channels, right? We have JP, who been in the OTP community for some time, and every time we finish the webinar, right, he kind of sum up the learnings, and he found the webinar so helpful. Simon also agreed with JP that the information that they got from the webinar is very helpful. And Kathy also agreed with JP and Simon. Fantastic informative webinar. Evelyn also agree, and then Van Viet that also say that helped him a lot. And he said that it's a great webinar every time. Also JP again, a lot of insight share, and GS absolutely agree. Thought process very insightful. Praveen also say the same thing. Siwi say appreciate the commitment that I put in, and he say OTP worth every penny. Again, I leave this one here with you. It's exactly 12:30, right? So it's it's actually about the time that I want to share. And thank you for staying with us.